Hi, everybody. It's Jim Crimmins. It's Wednesday evening. I appreciate your being here. I know you have a lot of other choices that you could have chosen to take place tonight, especially this time of year in the Phoenix area. It's such a beautiful, beautiful time of the year. But I'm glad you're here. I've shown you the couple of pages already on the disclaimers that we have to put on, like ladder manufacturers do, and our contact information. I will share my personal email address and contact information soon. Now, whether all of you are thinking about going into business, or you may have set up your business sometime in the past, if you have set it up sometime in the past, this will be a great review on some of the things that you should have done when you set it up. One of the things we do is work with a lot of people that have previously thought they set up their company properly, and when we review their paperwork and other things, we find out that they haven't. So this will be a good review for you. And if you're contemplating setting up a business, this is going to give you a good checklist to see what you need. And at the end of the presentation, I'll make an offer that if you want the slides from the presentation, I'll be more than happy to send them to you. You just need to send me an email. The first thing we need to consider as we're starting to set up a business is our financial resources. You know, do you have enough money to sustain me as I move through the life cycle? The primary reason that small businesses fail in this country is that they don't have enough money. And my thing is just going off on its own. But that they don't have enough money to get them through the startup phase and then the first couple of years before they're at a break-even or better position with their companies. So the first thing that you need to do is to examine your financial resources. Do you have enough to sustain the business as you move through the life cycle? And the places in obtaining the business income or the business money is obviously your savings account. You can borrow from family or friends. Small Business Association is a great place to go. In fact, I financed a office building through them and found it to be extremely easy. Very nice people to work with. You might be able to use your retirement if you've got a 401k from a previous employer. You know, you can roll that over into a self-directed 401k and then borrow up to $50,000 from it. If you need help with something like that, be sure and call me. We can get you with one of our attorneys to show you how to be able to do that. And, you know, you can use credit cards. Lots of ways to get money. You can do crowdfunding if you've got a great idea. I'm enamored to see how many businesses are setting themselves up with crowdfunding at this time. So there's lots of ways to get money, but the key here is, do you have enough money to be able to sustain yourself? And in order to do that, you need to start thinking about financial reports that you can look at that will tell you whether you have enough money to get along. And this is the first in an 8-part series. We'll be doing these every 2 weeks. I think the 4th or the 5th series, we have a lesson on creating a cash flow management report so that you can tell when you're going to need money, if you're going to have enough money at that point. So be sure and watch your emails. We'll send you out an invitation to each of them. I believe next week we're starting on, hey, why do I need to pay attention to my financials? And in fact, it's so funny because earlier today I was visiting with a business, and she felt she was starting to have problems with her previous accountant. And when she told me why, I said, yeah, you're having problems. They hadn't had a P&L or a balance sheet report for the whole year yet, and yet she was paying them on a monthly basis. So next month, or next period, 2 weeks from today, we'll figure out why it's important for you to have and what you should have as far as financial reporting is concerned. Second biggest mistake after money that I find that most entrepreneurs make is that they think they can do everything. They're going to have the time and energy to be able to do everything. They're going to be the HR manager, they're going to be the operations manager, they're going to be the accountant. You name the task that needs to be done, and they're going to be able to do it. However, it's very important that you try to zone in on what your best talent is. If your best talent is in operating the business, then you should become the operations manager. Now, recognizing that, I know I've started a couple of businesses where I didn't have the money to go out and hire someone to come in as a controller or in any other position, marketing or anything else. But remember, folks, as you go through this, you can find a company like Small Business Financials that can become your controller until you can afford to bring one on staff. You can find different marketing people through sites like Fiverr and things like that to help you get the things you need to have done. So don't truly believe that you need to do everything within your company. And that's the worst thing you can believe, because then you're never going to be able to find anyone else to work for you, because you're going to take over from them every time you turn around. The third area is, have you really developed a strategic business plan? Well, there's software out there that will help you set up a budget, that will help you in a lot of other areas. So you've got the vision, you're the entrepreneur. Let's put a strategic plan together, including all of the financial data that we need to know. The next thing you need to worry about is what kind of business should you use. This is really important at the start of the business. Should you be a sole proprietor? That's obviously the easiest one to do. You don't have to do anything. I'm not sure why my computer is doing what it's doing, but it certainly is. And we'll try to get it started here. A sole proprietor is the easiest thing to utilize because you don't have to do anything. Then you've got two different types of corporation. One is a C corporation, one is an S corporation. There's different benefits for each one of those to a small business. I know an LLC lately has been the business of choice for everybody. May not be the best one for you. I'm a firm believer in cash flow, folks. And so my belief is that for every dollar that you can write off as an expense and not pay tax on it, some percentage of that is going to come back to you because you're not paying tax on it, which will increase your cash flow. Well, an LLC is a flow-through entity, and everything flows through to you. You're going to have to pay tax on it all. So it may very well not be the best entity, but again, it may be the right one for you. And an LLC can be set up as either a corporation or as a partnership. So you have to take that into consideration. But each one of these has tax confidence. Now, what state should you set your entity up in? It's my belief that it is best to set it up in the state that you live in, that you're setting your business up. In fact, there are laws on the tables for each of the states. They're called nexus laws, which indicate if your butt's sitting in the seat in Arizona, that's where your business should be set up as an entity within Arizona. Now, I know that there's a lot of corporate puppy mills out there that advertise on the, well, they advertise everywhere. I try to listen to baseball scores as I drive to work in the morning, and I get 5 commercials for corporate puppy mills. But, and a lot of them are pushing Nevada corporations or Wyoming corporations or even Alaska corporations. Believe me, I can probably prove to you, if you want to give me a call, that it's going to be cheaper in the long run to set it up in your own state. Now, if you happen to be in California or Illinois, I would have a hard time showing you that. But anyway, it's my belief that if you set it up in the state you live in, the better off you're going to be. And then, do you need an EIN? An EIN is an employer's identification number from the federal government, and it identifies your business. And yes, you need to have a EIN because it does identify you. You can't have payroll without an EIN. You can't really file a tax return without an EIN. So yeah, you do need to get an EIN even if you're going to be a sole proprietor, and it's very easy to go on the IRS website, irs.gov, and get yourself one. Now, if you're setting up an entity, when you set up the entity, it will be given an EIN. A big question comes up is, what should your tax year be? Now, it's got to be for 12 consecutive months, and most people just roll over and say, okay, I'll have it the same as a calendar year from December or from January through December. That may not be the best tax benefit for you. It may be better to set it up on an off calendar year. But then you need to talk about that with your accountant. If it saves you money and it increases your cash flow, that would be definitely the thing to do. A huge decision for you to be is, what accounting method should you use, the cash method or the accrual method? Now, in the cash method, you report the income in the tax year that you receive it. Let's say you sell some goods and you're paid in November. Well, that cash method would, for the sale of the goods, would be in November of that particular year. But the accrual method, now let's say that you have net 90-day terms when you're selling it. You sell it in November. Well, it's not due until, let's see, to December, January, be in February. So you wouldn't earn it, you would earn it in the accrual method would be in November. The cash method, I just confused myself. The cash method would be when you took the cash within that 90-day terms, 90 days after you sold it. Now, most small businesses set up on the cash method, but that doesn't mean that that is going to be the best one for you. You need to get your accountant involved and let them help you figure it out. As a business, what taxes will you be required to pay? Well, a lot. Obviously, you have state and federal income tax. Two big ones are the self-employment tax and the employment taxes. Very big because You are personally responsible for those, whether you have set up a corporation or whatever you've set up. They will come after you personally if those have not been paid. Some states have excise tax. The state of Texas has a huge excise tax. Property tax if you own a building. Use tax, which I didn't put here, if you buy equipment out of state and they don't charge you, let's say you order some books from Amazon and you don't get charged sales tax. Well, if you're squeaky clean, you need to report that as use tax and pay for it to the state that you live in at the end of the year. And then, of course, sales tax that you're charged every time that you buy something. So anyway, there's lots of taxes for you to have to pay, and it costs you a lot of money. So you want to be able to set yourself up in a position with the help of your accountant to where you can minimize these taxes. And it's very important that you do that. Do you need to pay estimated taxes? It depends. Estimated taxes the first year, if you're in a business that you're making a lot of money, I recommend that you do pay them. And the reason why is I once had a client who made a ton of money one year and listened to the people at Microsoft Money who said, hey, they had come out on their platform and indicated that, hey, you probably shouldn't pay any estimated taxes because there's no penalty. All you need to do is pay interest. And the interest is like 1%, so why pay it? You can pay it later. Well, what happened is this guy lost all of his money in the second year before his tax return was due, had no money to pay his taxes from the previous year. Even though he'd lost it all in the second year, he still owed it from the first year. So I think small businesses have enough to be worried about without taking on some other worrisome avenue. And therefore, if you're making a lot of money, why not quarterly pay your taxes that are due, and then you don't need to worry about it. One of the biggest things that the IRS is looking at today is the difference between employees and contractors. A lot of small business people get in trouble because they know if they hire contractors to work for them, they don't have to pay employment taxes. But the IRS has strict rules on what constitutes an employee and what constitutes a contract employee. If you want to look those up yourself, you can go to the IRS.gov. They've got a great search engine. Just put in contractors, and I believe it'll come up and show you the difference between the two, and you have to meet certain requirements if you're paying your people as contractors. Now, if you have employees, you need to get a form as you hire them, a Form I-9 and a W-2, or a W-4, I'm sorry, filled out as you hire them. My recommendation is that you have a file folder for each of your employees. In case you're ever audited, we want to show them that we're running this as a business. These two filled out forms would go in there. Also, their application would go in there. And you should have either a quarterly or a 6-month review with them that you can put in there also. And this is particularly true if you're going to hire relatives. Make sure that if you're hiring relatives, you keep them at arm's length and dot all your I's, cross all of your T's. Now, if you decide you want to go the contractors, you're going to pay them with the 1099 at the end of the year. There's no W-2, and you're not withholding any taxes. But the rules that govern these, as I said, are they're very lengthy. So you either need to meet with your accountant, or if you have the time, go to the IRS website and see what the difference is. It's pretty significant. And the penalty of hiring contractors when they should be employees is severe, because you will owe all of the back payroll taxes that you should have deducted from the employee's pay, plus penalties and interest. And again, that is personally liable from you. That is not the company's liability. One of the things that most small people, they probably realize, but they don't want to do it, is keeping records. But keeping good records is the way to stay out of trouble with the government. That's the first step. Number two, keeping good records will allow you to know how your business is doing. I am surprised each year when I talk to clients, when I talk to other folks in the business world in December, and I ask how their year's been. Well, they don't know. In my opinion, that's the worst answer you could ever come up with. You should know how your business is doing on a monthly basis. You should have a P&L and a balance sheet, and at least quarterly you should have a cash flow report that shows what your cash is going to be for the next 3 months and what your expenses are going to be for the next 3 months, to make sure that you can get through those 3 months. Because you may have to, let's say you're running a little short on cash and you know about it. Well, there's things you can do. You can not pay your bills on time and stretch them out a little bit. You can lay off employees. There's all sorts of things you can do if you know about it. If you don't know about it, there's nothing you can do. So you do want to keep good records to monitor the progress of your business, to help you prepare the financial statements. The key, if you keep your records all year long very well, the cost of having your tax return done will significantly decrease. So it's very important that you get in the habit of keeping records. Now, do you need a bookkeeper? Businesses that can afford it, that are doing a lot of business and have, say, more than 5 employees, should probably have an internal bookkeeper, a controller, or a financial manager, or something of that nature. However, when you're getting started and when you're small, you can't afford that. So there are bookkeeping services like we are, like Small Business Financials, that are around. You should interview 1 or 2 of those and see where your fit is, where you are comfortable, and what reports you're going to get. Find out exactly what you're going to get from these people for the money you're going to pay them. Because it's very important, again, for you to have those financial documents at the end of each month to know how you are doing. I appreciate your being here. I'll open it up for questions now, and we'll see if anyone has any questions. Let me try to figure out how to do this. If you got a question, just type them in the question area down there, and I'll try to answer them. The other thing is, my personal email address is jimc, Jimc, at smallbusinessfinancials.com. My phone number is 602-393-3480, extension 213. Again, 602 393-3480, extension 213. So if you've got something that you'd like to ask, but you really don't want to ask it in front of a group like this, feel free to give me a call. Be more than happy to talk to you. As my employees indicate, I don't have enough to do, so I'm in their hair all of the time. If you call, you'll save one of them. So please feel free to. And I don't see any questions coming up here. Did I do that good a job, or are you all asleep? I know there's no football game on tonight, so. Okay, well, hey, I really appreciate your being here. Let us know if we can be of any help. And remember, this is the first of an 8-part series. Next week, we're going to talk about the financial reports that you need as a small business. And hopefully, I've got those timed so that they will be a 30-minute presentation. And that would include any questions. So, Jamie, are you about to ask a question or no? I guess not. Okay, again, thanks so much, folks. I appreciate your being here, and we'll see you somewhere down the road. Bye-bye.